Should I buy the stock? Should I short the stock? Should I hold on to my position? Should I close my position? Trade small, think big. Learn the psychology to become a successful stock trader. Hello everyone, and thank you for tuning in and thank you for your time. I hope if you traded, you made the correct decisions and you treated yourself well, because you are the master of every decision that you make in the market. You're solely responsible for every decision, good or bad, in the market. So you cannot force the market to do whatever you want or what you believe it should be doing. The market's going to do whatever it wants, and you're just there for the ride. So always make sure that you have risk parameters, and you have a trading plan, and you have a game plan to enter every trade. Now, today's presentation is a very interesting one, and I hope once you finish the presentation, you're able to take away some insight and some lessons to implement into your trading that'll help you improve your trading, improve your outlook, and more importantly, develop the proper psychology to becoming a successful stock trader. Now, the fail rate is very high in becoming a successful stock trader, but by far the biggest difference, by far, it's not even close, the difference between a profitable trader and a trader who loses money, who has not made the progress that they want, is the mindset, is the psychology. And we're gonna talk a little bit in further detail of some of the things that separate a professional trader versus a novice trader. And this is going to be very interesting so just stay along for the presentation, and hopefully this will help you out. And once again, thank you for your time. So let's just dive into it. And for disclosure, this is educational purposes. I'm not a licensed professional. I'm just sharing my trading experiences, and hopefully you can get something out of it where it can help you not make a mistake or elevate your trading game to the next level and make a certain breakthrough or make a certain leap of progress into your trading. So let's get into it. So we're going to talk about novice traders versus professional traders. The difference in their practice, what they practice, how they practice, why they practice, the difference in their approach, how they approach the markets, how they approach every trade, how they approach trading in general, the difference in their mindset, what sets a trader apart from another, how do they view the market, how do they interpret the market, how do they digest information. Also, what's the difference in their focus? What do novice traders focus on versus professional traders or profitable traders? What strategies the novice trader chooses to trade versus a professional trader. And also, once again, not as important as the mindset, but it's probably number two, is risk. The difference in how a novice trader trades risk versus a professional trader on risk management. So one of the first things we're gonna get into is practice, and then more practice. You can't say this enough. No matter what you're gonna do in life, you have to spend the time and you have to dedicate a certain amount of hours of your day to a specific practice that you want to get good at. Now, you go to the gym, right? It's legs day, it's arms day, it's shoulder day. And even within the shoulder day, there's still different exercises that target at different areas of the shoulder. Trading is no different. There are many different areas of trading, and a lot of times people kind of overlap them, where they don't really concentrate on a certain area of development, and they don't really grow that part of their mind or the psychology strong enough to handle what happens in a real life market, in the scenarios that you will get put in, that you're going to have to make very tough decisions emotionally at the beginning until you get really good at not trading emotionally and you're more rule based. Now, the professional trader and a novice trader practice different things. And it's very important. Like, if you want to be a professional athlete, you have to practice, practice, practice. And that's the only way you're going to get good at your craft. That's the only way you're going to sharpen your skills. That's the only way you're going to acquire new skills. That's the only way you're going to gain the confidence in everything that you're learning, and even an application of those skills and tweaking. So, what does practice mean to a novice trader versus a professional trader? This is a very good question. Most beginner traders do not even want to practice. They want to go live right away. Now, let's really take a look at that thought. Why do you want to go live? What skill set have you developed that has made you gain the confidence that it's better for you to go live and trade live money and risk your hard-earned money to see if you can make money? Now, the fail rate is very, very high in trading. Traders fail at a very, very high rate. And once again, it's not, you wouldn't believe, but it's not the charts, it's not the reading, it's not that they don't study, it's not that they don't go take courses or seminars. It's literally, it comes down to the mindset of a trader, the psychology of a trader. Now, how do you develop the proper mindset and the proper psychology to become a profitable trader? That, like anything else, has to be practiced. And it's a very specific practice. Just like if you want to get your legs stronger, it's very specific, the exercises you're going to do every single day. You have to do squats, leg presses, and so on. Each exercise, even though you're doing a different exercise, is targeting the strengthening of your legs. Trading and any other profession is no different. You must practice to strengthen and develop your fundamentals. You must have great fundamentals in anything that you do. You must master the small steps before you leap and run. You must master your fundamentals in anything. And it may be tedious. It may seem very below you, or it looks like it's too easy, or you say, oh, I got that, I don't need to do that exercise anymore. But you're developing your mindset, you're developing your core fundamentals, and you do not need to put live money on the line to develop and understand what you're going to practice, or how you're practicing, or the goal of why you're practicing. And this is where a nice little scenario, a nice little technology that has come about, that's called paper trading. So what is paper trading? What is demo trading, virtual trading, simulated trading? What is that? This is a perfect way, or a perfect way to develop and get introduced to stock trading. It's fake money. It's a demo account. So it's funded with whatever amount of money you want, but it's obviously always best to use the money that you believe you're going to trade with, 25,000, 5,000, 100,000, whatever the number is, and trade it. Now, let me go back to the point. It's important that when you're in a demo account, you have to understand why you're even trading in a demo account, because you're trying to learn something. You're trying to expose yourself to something new, and that you don't need to lose money to do that. You do not need to risk your hard-earned money to understand that, hey, I shouldn't do this or I shouldn't do that because, look, I lost a few $100s or a few $1,000s. So it goes now to this question. Once you understand that you can paper trade or a demo account, let's look at a very important question. When you're practicing, what are you practicing? Making money in the markets is the end result of many rules to limit risk and take profits based on your style, personality, time, knowledge, and capital. This is so important. I'm going to repeat it again. Making money in the markets is the end result of many rules to limit risk and take profits based on your style, personality, time, knowledge, and capital. Now, truly grasp what that means and why practicing is important, why practicing the correct exercises is important, why getting the correct fundamentals. Now, you go into a demo account because you want to also get familiar on how to place orders, where you want certain screens, where you want your open orders, where you want your executed orders, where you want the charts, how easily can you use the interface, how easily can you bring certain studies or certain time frames. Do you want to look at multiple time frames? All this has to be done, and you do not need to risk money to learn this. You also don't need a live market or risk money to understand what is support, or to learn to identify what is support and resistance. You don't need live money to do that. You don't need live money to understand retracements or what that is. You don't need live money to create pivot points or understand candlesticks or moving averages. You don't need live money for that. That is can very easily be done in a simulated trading account. That does not need money that's risked for you to understand what is going on and lose that money to say, hey, I don't understand this, or I do understand this. So there's a lot of things that you can practice in a simulated trading account that you don't need live money for you to start understanding the fundamentals of trading before you even place one trade. You have to get very, very comfortable where everything is. You have to get very comfortable on how to exit a trade, how to enter a trade, more importantly, how to exit a trade if something's going against you, how to exit a trade if you have to take profits. And all this is very important. And once again, you do not need live money to understand that. So let's go move forward and ask yourself this question. Novice traders practice trying to make money. Pros practice their rules and how effective they work in different trading situations. Once again, these are very, very enlightening. This presentation is just very, very enlightening. My apologies on that. It's just very enlightening when you see this and you truly understand what this means. Novice traders practice trying to make money. The pros, the profitable traders, they practice their rules and how effective they work in different trading situations. When you become a profitable trader, just like the last slide, it's a culmination of many, many rules that limit you from making all these errors. Every single rule that a trader has is because they have lost so much money trying to trade that they made it a rule. I'll give you an example. No more trading, let's say, after 1 o'clock. No more trading after 3. No more trading, let's say, for example, at noon. I should enter more trades during, whatever time. This is all rule based, and they come up with all these rules because they have practiced and they found out that they lose money time and time again at a very high rate, that they make it a rule and say, you know what, I'm not going to add no more to a losing position. You know what, I can't risk more than $200 on each trade, or I can't risk more than $300 on this stock, or I need to adjust my entries. These are all rules that guide the trader in the many different scenarios that come up while they're trading. And these rules help guide them once that situation presents themselves. Hey, I have a rule for this situation. Hey, I have a rule for this other new situation. I have a rule. Hey, the stock decided to do this. I have a rule for that. There's rules upon rules upon rules. Don't risk another rule can be, hey, don't risk more than 2% in your account per trade. That's a rule. Another rule can be, I only trade when the stock hits the 200-day moving average. Okay. Now, once again, you do not need to trade live money to understand that. You don't entering a trade based on certain rules. You do not need to risk money to see if it works. In a simulated trading account, you can do that perfectly fine. And that's the difference between novice traders and professional traders. And we're going to get into and I have a few other slides coming up, and you'll see why it's so important to practice. But just remember that at the beginning, when you first start trading, you don't have any rules. You kind of pick up a little bit maybe from today, you pick up a little bit from somebody else, and you start making it your rules. But your trading style, the time, your knowledge, and your personality will dictate how you trade. So you truly have to have a very high self-awareness on what works best for you. Some traders can be intraday traders. Some traders can be more positional traders or long-term traders. And what happens is sometimes you like the idea of being a intraday trader, but you seem to be losing money at a pretty high percentage. You need to change that. Maybe change your style, change the stock, change. Everything, when you're losing money, becomes a rule. And throughout the years of practice, every single thing becomes a rule. And that's how you kind of develop your own personal trading plan. And a lot of the strategies that you trade with is to avoid mistakes. It's not so much to try and make money. It's more as, hey, this is costing me X amount of dollars every single time that I trade it, and it's wrong. Novice traders trade anything on the news, social media, or a friend's hot tip. Pros practice and backtest all new trading ideas and have a core of stocks they trade. You're going to see that some of these ideas and responses kind of overlap. So pros practice and backtest all new trading ideas before they put live money on the line. This is crucial for novice traders. This is so important if you're a beginner trader to fully understand that pros, profitable traders, where you want to be in the future of your trading journey, where you say, hey, I want to be a profitable trader. What do they do? This presentation is detailing what you should be thinking and what you should do to give you the highest probability to try and become a profitable trader. If a professional trader, if you go to a professional trader and you say, hey, I think I found a new trading idea where you buy a stock every time it drops 10%, or you buy, the 52-week highs, you buy the breakouts, or you buy any strategy, or you buy order flows, or you buy certain support and resistance, or you only buy at the 50-day moving average. If you come to a professional trader with that trade idea, the very first thing he or she will do, or they will do, is back test it. They will practice and put that trading idea into all scenarios to get the proper data. How often does it work? How often it doesn't work? How much do I lose when it doesn't work? How much can I make when it does work? How often does this edge get triggered? Does it work better in certain types of markets? Does it work better bullish? Does it work better bearish? Does it work better on which stocks? It looks like it doesn't work that good on these stocks. And they start tweaking it way before they enter or they invest any or risk any money on this strategy. That's crucial to understand if you're a beginner trader. A pro will not put any money at risk until they gather data on that strategy. When does it work? How often? Certain percentages. I mean, they want to know everything about it for them to even say, hey, you know what? It works or it doesn't. It looks like it failed all the tests, all the back tests, so I'm not going to do this strategy. So if a pro trader is willing to put any new trade idea into practice, into a demo account, and back test it before they risk any money, why, if you're just beginning and know nothing about the markets, why do you want to go live? Why do you want to, risk your hard-earned money? Because the market takes it away in minutes and seconds. What takes years to save or to build in your trading account, can take it away in minutes and seconds. Why do you believe going into a live market with no rules in place that you're gonna be successful? If the most successful traders still backtest and backtest any new trade ideas to do that. It's very, very important that you understand a lot of these things that make the difference between a novice trader and a pro trader. A pro trader is not eager to put live money on a strategy that they've never backtested. No way. They just won't do it. They will not do it. They need to see data. And why do they need to see data? Because they already know a pro trader already has a profitable edge and strategies that enable them to take profits from the market. And they also have a core of stocks that they already tested all this out. They say, hey, it works better on Apple. Hey, it works better on this pharmaceutical companies, or it works better on healthcare. It works better on this. They've already done their homework. So when you bring a new trade idea, they're like, oh, okay, unless that person has back tested it, and they say, hey, listen, I've back tested this. These are the results I'm getting. And even then, they're still going to want to trade and back test it. So it's crucial for you to understand that a demo account, a virtual account, pro traders still do that even after years and years, 10, 15, 20 years of experience trading and being profitable. They still will not risk any money until they get proper data on all trade ideas. And this is so big for a beginner trader to understand. There is no rush to go live. A pro trader will not do that. So now that we talked about backtesting any new trade ideas, this is a good one also. Novice traders trade all the time. Pros exercise patience and wait for their edge to trigger. Now, when you're a beginner, you want to trade to make money. And that's one of the reasons that at the earlier presentation is new traders trade to make money, and pros trade their rules and they implement how and how effective they are in different situations. Now, novice traders, they want to trade all the time because they always feel they're going to miss out. They always feel like, if I'm not in this trade, I'm going to miss a great opportunity. Now, is that the proper mindset to have? Or is it, hey, my edge just got triggered, I should enter this trade based on the rules that I have practiced and learned, and all the rules that I implement that can help guide me in my trades? That's totally different than wanting to enter because you feel the stock is going to go up or go down. Unless your unless your edge has been triggered, there's no reason for you to enter the trade. How do you get an edge? How do you know what makes you a profitable trader? You don't need live money to discover that. That's one of the biggest misconceptions, is to discover certain things. You don't need live money. To find the rules that work for you, you can very easily do it in a demo account, simulated trading account, and get a grasp of what works. Now, you have to treat it like real money, and you have to treat it like, these are the rules that I'm going to use to trade and not deviate, and really get some solid data on it before you go live, and treat it like a professional. And okay, now that you know that you're live and you know that the edge works, then you could put some real money on the line. But you need to exercise patience, and you only trade when your edge gets triggered. And that's also the difference in psychology. A lot of these things are all these things are it's a combination of different areas of the mindset and psychology that novice traders have versus a pro trader. So let's go forward. Novice traders jump around from strategy to strategy without gathering proper data. Pros are tweaking their strategies and gathering data. So we just spoke about a little bit on that. Is a novice trader, because they don't see it work a few times, may jump to another strategy and jump to another strategy and jump to another strategy and go to another seminar and go to another course, and not really do the due diligence and really find out how the strategy works, when it works, and gather proper data. Now, a pro has their strategy in place, and they're always tweaking it. Maybe if I trade less, maybe if I trade more, and they're always trying to get their edge to be sharper. So they're not really jumping around to too many strategies. And once again, if someone brings a new trade idea, a new strategy to them, they will paper trade it. They will back test it. They want to see how it works in all trading environments. And you should too. So they're not jumping around on one strategy to another to see what works. That's not really the journey that most traders have. They kind of gather little information here and there, like today's video. You probably gather some certain things, but today's mostly on having the proper mindset. The difference between a novice trader and a pro is by far the golden map, or the holy grail to giving yourself a chance to be a profitable trader. Everything else, you can easily pick that up. That's the easiest part. Getting the proper mindset and psychology is the most challenging part for all traders, for the majority of the traders. Some do it faster than others. Some may never do it. But definitely these slides are very, very important to the development of the trader, and going from novice to pro, on giving yourself that chance. So once you find a strategy, like, really look into it, like really study it, really trade it, really gather data. You're gonna have to sit there like a scientist and, hey, I placed this trade at 10 o'clock. It went against me. You have to gather notes. You have to say, hey, it went against me before it went for me. I got stopped out. What's the risk? Just every single thing that goes into a trade. And we're going to talk about that in another video about having a trading plan. But even that's not superior to this. The proper mindset is the beginning, is the seed of watering of your plant growing into a professional, a profitable trader. So novice traders think how much money they can make on each trade. Pros think how much money can I lose on each trade. The more you trade and the more you're involved in the markets, you start understanding that every single rule, every single guideline that you have is to eliminate error. The markets are designed to make you lose. The markets are not there to help you make money. I mean, that is truly, you do not go into a casino thinking, hey, I just quit my job, I'm going to go to the casino to make money. The casinos are designed to make you part ways with your money. Sure, you'll win here and there, but at the end of many visits at the casino, you will lose. Only the best, even professional gamblers, poker players, they have certain rules, and trading is no different. They have certain guidelines. I remember one poker player, I forgot his name, he said he started noticing that he would be up many times and then lose it all. So he became very disciplined, and he said, once I'm up X amount of dollars, I'm not playing any more hands. And he found out that to be that little tweak where he was up X amount of dollars, let's say 500, 1,000, whatever he was, that little tweak turned the corner for him. He said, after that, I was profitable almost all the time. And he actually quit his day job and became a professional poker player. And he started making more and more rules on money management. When to bet up, when to stop playing any hands, when to fold. I'm not too familiar with a lot of the terms of poker, but you get the drift, right? When to add to your position, when to stop trading, when to call it a day, because you've lost too much, when to just take your profits and enjoy the day, and so forth. So pros, even in poker, understanding how to bet, which means understanding how much you're willing to lose on this hand. And in the markets, when you're trading, there are certain scenarios that give you higher probability for one outcome to occur over another. It's not 100%, but the probabilities become higher. Now, that's why it's important to understand when I place a bet or I enter a trade to have the correct risk management and to have an understanding of, hey, I'm only gonna do this trade, and I'm only gonna lose X amount of dollars because it looks like a higher probability, but it can go against me, and I'm not sure if this is the one that's gonna work out in my favor or not. So you can't control what the market does. Therefore, you can only control what you do. And the more you trade and the more you practice and the more you involve with the markets, you will begin to understand that every single rule that you have, more so, is to limit your losses and eliminate error. And error it equals loss of money, loss of capital. You could be in one of those days where your account's just getting crushed, and then you say, you know what? I'm never gonna let my account lose in one day more than 10%, let's say, whatever your rule is, 5%, 2%. I'm never gonna let my account go below this number, or when my account reaches this number in profits, I'm going to cash because I don't want the market to take my profits, or I want my my account to be in a position of strength. I want my, my mental capital also to be in a position of strength. And it's just very, very important for all you beginner traders that you really, really understand what you're practicing. Are you practicing money management? Are you practicing the discipline of being patient? The discipline that you only trade when your trigger, is when your edge is triggered. That you exercise proper positioning. That you exercise when to take profits. That you understand this is a trending day. That you understand why you're entering or why you're exiting or why you should stay away. That it suits your personality and your time. This has nothing to do with making money. Making money is the end result of a lot of the rules and a lot of your core foundations that you need to build at the very beginning so you can have great habits of money management. Hey, the trade went against me. I stop it out. You become so good at that. Hey, look, all my positions are going against me. Some news that came out and now the market just turned around. Everything's going down and I'm long. I need to exit and have the discipline. And, are you practicing not to have fear? Are you practicing not to have anxiety? Now, all these things that you start feeling while you're trading is based on a lot of non-rules that you have. You don't have the discipline to implement maybe a rule that you have. You have to practice that. Or maybe you don't have a rule and now you have to make up a rule for that. These are all things that you have to discover in your trading and that you have to implement and practice, and even practicing to make the proper decision at the right time, no matter how tough it is, no matter how emotionally difficult it may seem, or the anxiety, or you get a brain freeze. In a live market, yes, it's going to be a little different than in a simulated trading, because now you have real money on the line. But do not confuse developing the proper rules and having the correct guidelines and having the correct risk parameters already in place before you go into a live market. I'm going to say that again. Get the proper rules, the proper guidelines, the proper risk management. Practice that. Practice making the tough decision. Try and practice not being emotional, that you always follow the rules before you enter a live market. Therefore, you have a sound foundation that when you're in a live market and everything's going wrong, you have rules in place. You look down and say, hey, scenario 1 is happening. What is the protocol when scenario 1 is happening? When everything's going against me and I say I'm not losing more than 5% in my total account in one day, is that a rule? And you look at it and you see your account's getting close to 5%. Well, you already know what the protocol is. The protocol is exit every single trade and go to cash. You don't want to find that out in a live market to make that a rule, that your account just got crushed by 10, 20, 30%, to say, hey, going forward, I can't lose more than 5%. You don't need to do that in a live account. You don't. You can very, very easily do that and make up these rules and exercise and practice discipline and practice all these rules in a live trading account. In a simulated trading account before you go live. So I hope everybody enjoyed today's presentation. The novice versus the professional trader, the difference in their practice, their approach, their mindset, their focus, their strategy, and their risk. And I hope you're able to take something from today's presentation and implement it into your trading to make you a better trader, or to eliminate an error, or to give you a trade idea to say, hey, I need to start practicing this, so I need to start practicing more discipline. I need to start, developing maybe more rules to eliminate loss, or I need to develop more rules on taking profits, and just get inspired. Trading is a journey, and it's about finding what works best for you. What works best for you may not work for me, and what you see other people do may not work for you. But try it out, give it a shot, try to implement it. There are certain things that work for everybody. Risk management is for everybody. Discipline for all traders. Rule-based trading for all traders. Exercising patience for all traders. Waiting for your edge to trigger for all traders. This is common. So once you have that, you're good to go. I want to thank you very much. Be safe from the markets, and always remember, you are the biggest risk in the market. So make sure you have the strength to make the proper decision. Protect your hard-earned money. The market will always be there tomorrow. If you have any more questions or comments, leave it below. Hit the subscribe button, like they say. And if you have any questions, just email me, and I'll be more happy to help you out. TradeSmallThinkBig@gmail.com. Have a good day, and thank you for tuning in. And see you guys in the next video. Have a good day. Bye.